Hey, it's Clay at claytrader.com, and in this video, I want to show you how I find stocks to trade and just share with you a day trader strategy that is very straightforward, that is very simple, and quite frankly, very, very powerful and easy to do. In fact, I'm going to take you to my desktop and we'll walk through it with an actual situation that I recorded where the markets, I'll put it this way. I'm not going to sit here and make it all theory. I'm going to show you through a real life example and essentially kind of build a little miniature watch list with you later on in the video so you can see what I talk about here and then see how it unfolds in reality. But along with that, so I don't want to keep this all in theory, but on the screen here you can see results from members of mine that are part of my training and stuff. And this stuff, what I'm talking about, I mean, it works. All these members are doing this part of what I'm going to show, and you can see some great results: $1,200, $1,100, $1,000. Dan, who's a monster, $36,000. And then here's some results of mine, and I don't show any of this to brag. I mean, my results are actually the lowest of everything right here. But the point here is that, like I was mentioning earlier, this is not theory. So not only am I going to take you to my desktop to show you how this all would play out in a real world environment, here you see some real world results. So there is no theory here, but also on the disclosure front, perfect does not exist, okay? I'm not trying to come across like this is a strategy that fixes everything and will guarantee you make money. That's not what I'm saying. All I'm saying is that if you do what I show you here and implement this strategy, then you are going to help tilt as many things in your favor as possible. And that's what we want as day traders. We want to leverage as many odds in our favor. And that's what makes this not gambling. Because in gambling at a slot machine, there is nothing you can do, at least that I'm aware of, unless you hack the slot machine somehow. There's nothing you can do to tilt things in your favor. There is nothing you can do to, just pretty much rig the system. And we're not rigging the stock market because, as I just said, it's not perfect, but that's almost kind of what you're doing. We are trying to rig a trade as much in our favor as possible. And in the world of gambling, you definitely can't rig stuff. If you do, you end up with broken kneecaps in the back alley. But in trading, and this is why trading is not gambling, you can quote unquote rig things in your favor. And that's what we're trying to do. So as traders, what do we need to focus on? Well, the first part is we just need a trade plan, right? I mean, if you're traveling to a destination, you're going to want to have a plan of how you want to get there. The same is true in trading. And maybe this seems obvious, but I've been doing this since 2013, coaching traders and guiding traders. And, when I got started and I look back at it, I mean, I definitely was putting money into the market. And if I'm honest with myself, I had no idea what I was doing. It was truly a random gamble because I was not trying to rig anything in my favor. I was not trying to tilt the odds in my favor at all. I just came up with a very surface deep quote unquote plan. Oh, I think this is going to go up. Okay, that's great. But there was no really thought behind it. So a trade plan, though, definitely something you need. And the way I envision it is it's like a big triangle. And like any structure, you need to have a big base. And that's what we're going to be focusing on, a big, sturdy foundation. I mean, you don't have to be a structural engineer to understand that if you build a structure either on a bad foundation or just a poorly built foundation, regardless, yeah, I mean, you might still be able to build. It might still give you the quote unquote result in the very near term. But as far as long lasting results, yeah, it's not going to be long before that whole structure tips over and blows up, and it's just not going to be a pretty scene. The same here is true with the trade plan. We want our foundation. We want the base of our trade plan to be as sturdy and firm as possible. And in the world of trading, that's where we need to figure out context. Or in other words, bullish or bearish. What are your thoughts going in? Why are you feeling the way you are? Is it valid that you're feeling the way you are? And when you can establish some good firm context, some good logical context, like I said, does it guarantee success? No, it doesn't guarantee success. But are you rigging things? Are you tilting odds in your favor? You absolutely are. So how does this work? How are we going to tilt things in our favor? Well, we need some sort of average, and an average is helpful because it's giving us a baseline to measure certain components. So what do I mean by that? Well, when you can look at a stock, when you're looking, to find stocks to trade, and you're saying, oh, wow, that stock, that's interesting. Well, what makes it interesting? Well, because if you use this baseline, if you use this average that I'm going to tell you about, it's going to really, as you'll see, seem almost too easy. And you're like, oh yeah, anybody can do that. And it's really true, but it's one of those things that almost hides in plain sight. What are we going to use though for our baseline, for our average? The SPY. Now, if you're a brand new trader, if you're a beginner just getting started, the SPY, without going into too many details, is just an ETF, and that ETF tells you what the markets as a whole are doing. It's measuring the S&P 500. So if the SPY is having a good day, then you could go out there and tell your friends and family, hey, the market's had a good day today. If the SPY was really down on the day, you could tell your friends and family, oh wow, yeah, the market's had a bad day. So that's all it's doing. It's essentially telling you what the overall markets are doing. And we're going to use that as, like I said, our baseline. Meaning, if you're out there, and like I said earlier in the video, I will take you to the desktop. So right now, yes, I'm just kind of talking at the chalkboard in theory, but you'll see how this plays out here in just a few minutes. But if you're out there running some scans, and when I say scans, you'll see very, very basic stuff, and you notice a stock and it is actually above where the SPY is, then you could say, well, wow, that stock's relatively strong. So in the example you're about to see, the spider or the SPY was down 2%. So if you see something that's actually up on the day, well, that would be above average, right? Because if the average for the morning, which, like I said, little spoiler, that's what you're going to see, the markets were down 2%. So something is actually up on the day. Well, compared to the SPY, compared to the overall markets, wow, that's relatively strong. Meaning that's a situation where you'd want to be bullish. You would be thinking, oh, okay, that's an area where I'd maybe want to buy that stock, or trading jargon, go long the stock. On the flip side, if there are stocks out there and they're actually below what the SPY is, that's a situation where you would call them relatively weak. Relatively weak compared to what? Again, that's where we need our baseline. Compared to the overall markets, and we are defining, and we're using the SPY to define the overall markets. So when you locate a stock that's relatively weak compared to the overall markets, meaning it's actually weaker than the market as a whole, that's a situation where you would want to be, from a context standpoint, bearish. You'd be looking to maybe sell. You'd be maybe looking to go short. So that's the overall premise here. Find the baseline. For our baseline, we're using SPY because that just tells you what the overall markets are doing. And then you're starting to figure out, by just simply looking at percentages, as you're about to see, what's relatively strong and what's relatively weak. So at this point, let's go to my desktop and you'll see how this all plays out. Welcome to my desktop. So as we just discussed at the chalkboard, we first need to figure out, the baseline. What is the average? And as of the recording, this is all actually happening. So this is, it is what it is right now, and things are dynamic. Things are currently changing around. But as of the moment, the average right here is the SPY. So the overall markets are down 2.1%. So that's the average. It's a rough morning out there. It's a bearish morning out there. So let's just try to figure out what's above average and what's below average, and that is going to help determine at a very surface level whether things are strong, whether things are weak, and it can help us put us in the right mindset, the right context of whether you should be looking to buy and go long or sell and go short. So over here, and this is why I like the platform, and this is nothing, all platforms have something similar to this, but just a way to set up and see what's out there. What's, in my platform, Lightspeed calls it risers and fallers. But the idea here is, where are the gap ups? Where are the gap down? So this, scanner on your platform may be called gappers. Like I said, in this situation, it's called risers and fallers. But these are stocks that are getting volume out there and are seeing quite a bit of movement. But the key dynamic here that can really just help make this a very, very fast process is this column right here where it gives the percentage, right? Because that's what we need to use in order to figure out, are things above average, are things below average? And again, what is our current average? Well, right here around the 2% mark. So right off the get-go, you can see that, all right, well, these stocks over here would definitely be, above average. In fact, beyond above average. So beyond is very, very strong compared to the overall market. I mean, the market's down 2.2%. Beyond right now is up just shy of 12%. So in other words, looking like today, Beyond's not going to really care that much about what the market's doing. Now, of course, and just to continue to reiterate, I'm not saying this is a universal, there's no gray area. This is how, no, there's always gray area. Yeah, maybe the market ultimately does start to affect Beyond. But as of right now, as far as just like I said, establishing some context and putting you in the mindset that where you would want to be, Beyond seems to not even care what the market is doing. Same with Netflix. Look right there. Netflix is up 1%. So is Netflix up a lot? 1%, not really. But compared to the markets, Netflix would be relatively strong. It is above average. So when it is above average in terms of, the market being down, that being up, that would be something where if you're going into the day right now thinking, I think I want to short Netflix, I would say, I'm not, you can never say that it won't work out, but are you really putting all the odds, all the probabilities into your favor? Not really, because Netflix is relatively strong compared to the market. mRNA right here. If you were to tell me, I'm looking to short mRNA, I would quickly say, wait a second. The markets are actually down 2%, trying to drag stocks down with it. Yet you want to short something that's actually proven to be stronger than the overall markets. Again, could you make money? Yeah, you could make money, but are you trading in a systematic? Are you trading and putting all, as much in your favor as possible? No, you're not. And big picture wise, that's going to be a very difficult way to make consistent money. On the flip side, if you're saying, oh, look at this, Boeing. So Boeing, ticker BA, is actually down 4.4%, and the markets are only down 2%. That means Boeing is even weaker than the overall markets. So if you're to tell me, I want to buy, I want to go long, I would say, whoa, wait a second. Why are you looking to go long? Why are you looking to buy a stock that is apparently very, very weak? It's not even in line. It's actually worse off than the market is. So this is a situation where if you're to say, no, I'm bearish. I would want to short Boeing. I think Boeing has a setup, the overall context is bearish. Therefore, I would be looking to potentially short. I would say, hey, you know what? That makes really good sense because Boeing is relatively weak compared to the market. Market down 2%, Boeing actually down 4%. You look right here, Apple. So what's going on with Apple? Apple is down 1.8%. So in this situation, they're basically the same, meaning I would expect Apple to move pretty much with whatever direction the SPY is moving. That's probably what Apple is going to be doing. It looks like these ones would probably be mimicking each other. So, I don't really see any sort of advantage you could gain. Now, the disadvantage you could gain is to sit here and say, I want to go long Apple. Based on what? You have nothing in your favor that would make you want to buy. Now, if you say, I'd like to go short Apple, that makes sense at least because the markets are down and so it's a bearish environment out there. Apple's down, so it's bearish. But you can't really say that Apple is the same as Boeing because Boeing is relatively weak compared to the market, whereas Apple is just right in line. So hopefully that makes sense. Do you see the difference? Hopefully you do. 4% is bigger than 2%, whereas 1.9 and basically 2%, Apple and the markets are basically the same. Let's see what's going on. So CVX again. CVX down 3.6%. So this is a situation where, all right, the CVX is relatively weak compared to the market. So in this situation, if you were to throw CVX on a watch list, pre-market that was, possible shorts, we'll just call it your possible shorts, meaning you're looking to make money when prices go down, then okay, I would say that makes sense. CVX is relatively weak compared to the market, so you're gaining some advantage in regards to that. Now, some other things such as, WATT here. Well, actually, let me bring that up. So WATT, you can see it's basically a micro cap. So we're talking a $5 sub-dollar stock. It does. I always rule these ones out. Because these just they have a mind of their own. Same with penny stocks. So penny stocks don't care what the overall market is doing. Okay, so you can't really sit here and use this for that because they just don't care. So there's some of these situations where it's just flat out. So again, right here, CYCC. Let's click on that one. So here again, we're talking about some micro cap where it's not even $10 a share. So huge, down 27%. So yes, it's way, way, way weaker compared to the market, but because of that, you really wouldn't, it just doesn't really matter. There's just not much there to, I'm not going to say it's totally worthless, but when you get into the micro cap range, that's kind of a market in and of itself, and it doesn't really care what, the main market is doing. So this all applies to more so the names we've gone through, right? Beyond, Netflix, mRNA, not a well-known company at the time of this video, because they're a pharmaceutical, they've been getting a lot of press. But Boeing, right? Apple, CVX. Those are good, solid, regular companies. So that is what it applies to. But at this point in time, like I said, Boeing definitely relatively strong compared to the market. Netflix, strong compared to the market. Not as much, but I mean, still definitely strong. Market's down 2%, Netflix up 1%. And so just go through there, and that's how you can establish some quick context. That's how you can build some watch lists that, like I said, don't guarantee profit. And like I started off this whole video, I want to reiterate here, I'm not saying that just because something is relatively weak compared to the market or relatively strong, that means you just go and blindly short it or you go and blindly buy it. I really wish trading were that easy. And I wish I could sit here and say that this is like the holy grail of trading and that's all it takes is you just identify a couple percentages. Was that percentage bigger or lower than that one? And there you go. No, there's more to it. But as traders, this is where we want, this is why it's not gambling. This is how you make it not gambling, because we want to tilt as many things in our favor as possible. And this is one of those situations where you can tilt and just make sure you're putting yourself in the right arena where you should be. Is it a guaranteed arena? No, nothing's guaranteed, but is it an arena? Is it an area that can at least put some pressure in your favor? Absolutely. So this morning, as of the video, I'm going to be very interested in looking to potentially short BA, looking to potentially short CVX. I'm going to be very interested in potentially going long Beyond, very interested in potentially going long NFLX and MRNA for the reasons discussed. And Apple, don't really care about it because, like I said, it's basically right in line with the market. But Boeing and CVX, definitely very interesting. Microsoft is, it's I don't know. That's kind of one of those gray territory. It's down 1.4%. The markets are down 2%. So you could say, well, actually, it's relatively strong compared to the market, kind of, but it is still right in the same ballpark. So, I mean, that's where there's a little give and take there in terms of, when is it pretty much the same or when is it not? But like I said, there's not any debate here. That's very clear. 4% is a good chunk above 2%. CVX, 3.6, a good chunk above 2%. And then, of course, I mean, not even close here when you're talking 11% compared to 2%. At that point, it's very clear. But like I said, for me, and this morning on my, short-sided watch list, Boeing for sure is going to be on it. CVX for sure going to be on it. And then as far as the long watch list, potentially going long, BYND, Netflix, and then MRNA. So hopefully this helps. Let's go back to the chalkboard. See, I told you, nothing complicated at all. As a quick recap, a quick disclaimer, please don't go out there and say, oh, wow, that stock's relatively weak, and then just blindly buy right away. There's more that goes into a trade plan than what you just learned about and what you learned to identify. So please don't do that, okay? I mean, you're welcome to do that, but just promise me you're not going to come back and say, Clay, you scammed me. No, I'm not saying that that's the only thing you have to do. All I'm saying is that'll give you that good, think back to the triangle, a good, firm, solid foundation, which is the goal. So hopefully that helps. Hopefully that will inspire you to maybe just realize, oh yeah, maybe this trading thing doesn't need to be as complicated as what I thought it would be. Yes, there are more things that go into a trade plan, and I'd love to help you and guide you in building the entire trade plan. But if you just get that good, firm, solid foundation, at least you're on the right path, and you're not putting yourself in a situation where you're thinking you should be buying a stock that's in all actuality relatively weak compared to the market, which just doesn't make any sense. So like I said, hopefully that can help you out and get you started in the right direction. Now, if you did enjoy this video, then please hit that like button, and also in the comment section, I'm curious. I did the chalkboard here, and for you longer time viewers, I'm sure you've seen that usually the chalkboard is me standing in front, and I'm on camera. But what did you think about this video where I wasn't on camera? Do you enjoy these? Do you prefer when I'm on camera? Maybe you just don't care. Either is fine. And so I'm curious though in the comment section. Any feedback is always welcome. Or if you have any suggestions for future videos, I'd love to hear from the comment section below. But just as a whole, if you enjoyed this video, if you would like for me to keep making these sorts of videos, then the easiest and quickest way to communicate that to me is just to hit that like button. And I also hope I'd encourage you to check out the rest of the channel, and hopefully you decide to ultimately subscribe. And then I mentioned at the very beginning of the video, I showed results and made a comment about, these are members of the community and all that. So if you're interested in learning more about the community that I offer, you can learn more about that at claytrader.com/team. So thank you for watching, and yeah, get out there. Don't oversimplify the process, but remember, you don't need to overcomplicate it either. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.